Here, you got a pen? Or Sharpie or
Maybe is there a table over there?
I was looking at it. That blue one, okay, there's tape.
That's Lurgan, yes.
The blue painter's tape will work.
Perfect.
I think there's five. Nice. Some resources. That's okay. Well, I didn't know that this place existed, so now they.
Oh, no, they have that.
Now it's what it's the same. And I was like, oh, we should do our happy hour. Yeah, it would be fun. So I think we'll actually do it just this happy hour. Well, especially if they have this little day, this is great. Okay, so is that your spot right there? And then I'm gonna adjust my camera to accommodate your spot.
Oh.
You don't have to look at mine, you can look at that. Yeah. Yeah, I don't know those things.
Freaking out. Yeah. Yeah.
Always.
I literally had to click go live on StreamYard.
Oh. Well, now we know.
2 viewers. Oh, that's cool. Looks good. I wonder if we're able to move these.
So this is what
I'm trying just to have it like more over here so that way people can be right here. Yeah. Thanks so much.
So one of my buddies who's IG famous, he said like they love it, so yours love it.
Okay.
So the fact that you could look away every once in a while makes it feel like you're more naturally speaking to an audience. Right?
Just like that barrel, that barrel.
The other day, I did my Facebook Live I just did the other day. I put my script up here because I usually don't use it. This time I typed up a nice little like to keep me in line. And I put my script right up here. And so I kept looking right above my I'm like, okay, I gotta do that. I'm gonna have to put it like right here or right. 2 minutes. 2 minutes to live.
Mm-hmm.
Thank you, son. What's my drink? You could figure out like a sweet wine or something.
We have 2
Should I
views.
have a sweet beer?
2 views so far. But one of them could be me.
One of them was my wife.
That's awesome.
She's at home sick. And I'm like, you want to watch it on your phone?
Let's do a quick little wipey.
That's a very good idea.
Would you like one? A little wipe?
Yeah, I was gonna just.
Yeah.
Sure.
You want to keep this one? Keep that one.
Oh, there you go. Thank you.
Oh, thank you. And then, okay, so for like the raffle, there's people here to raffle. We brought some Amazon gift cards.
Cool. Now I got white piece now.
Oh, and
Who's doing the intro? You're doing the intro?
And then when, Tim too. We're gonna see what are you most comfortable doing. Do you want to be a Tim? Start out. Tim started out saying,
fine.
and then kind of
Yeah, whatever the plan
went
was.
to, and then ending with Carl. Yeah, kind of going into Carl's.
Tim to get his butt here. We got 2 minutes.
I know.
Hello. Andrew's like, I'm coming. There's beer. What is it? Oh, that's very good too. Congratulations on your. Good job. You rocked it. Okay, is it 6:30?
6:31. Yeah, let's get 10.
You won't be on mine.
There's a delay.
It's pre-started, so.
I think we are. Yeah, I believe we are. We sure are. Yeah. Oh, okay. There's a couple. Yeah.
Listen up for a second over there.
Everybody.
Leslie. As I'm talking, if you have any questions that pop in your head about, because I've always found the question and answer always gives the best information, just go ahead and raise your hand, ask the question. I'll repeat it because they won't be able to hear it, and then I'll answer the question. But if something pops in your head, please feel free to ask the question. Thank you. Good.
Let me go grab.
So yours is live right now.
Yeah. Oh my gosh, we're almost ready, guys. Just be patient. We're almost there. Look, we have 2 visitors already, and we're gonna have an amazing speaker right here. Amazing. He's gonna be on the podcast too, so tune in to that. But we're gonna have an amazing speaker talking about ice cream. I'm gonna get out of the way because I'm getting kicked out. Go. No, you're doing yours. Go. I was just entertaining my audience.
Oh my God, I'm not as exciting as Lori, but I'm gonna try. I'm looking at the freaking seat. She's like, look at the camera. Sorry, Tim Harrison, in the mortgage business for 30 years. For the first 10 years, I couldn't find a credit union in the crap. Carl is the real deal. Knows what he's doing. I have used it for the last 20 years. He's a big difference in life. One of the best things you can do to invest rate and the lowest cost up front is have the highest credit scores. This stuff is super important. Even if you're on the fence of buying right now, work on your credit scores because that's going to make the biggest difference. Carl, here it is. Thanks very much.
Ready to go?
Ready?
Okay. All right, everybody. Thanks for watching. We're here at the awesome High Point Brewery in beautiful San Dimas, California. And I'm going to be talking about credit. Credit over here. Your credit as it relates to buying a house. Especially, I know a lot of people feel that if they have less than bad credit, that they just can't buy a house, which isn't true. You're going to find if you have the income and you know, hey, I can afford a house. I know how much my payment is that I'm paying on rent right now. Then guess what? You can buy a house. I can almost always find a house. Of topics and questions that are very common that people ask. So I'm going to go over them, and it's not going to be too technical. I'm going to keep it very simple. And also, the crowd we have here, very often they're going to pop in with some of their questions. So I'll repeat that, and then I'll answer their questions. So I'm going to start off from the beginning. The first question was, what causes bad credit? Every adult in America has a credit score. And your credit score essentially is the summation of your positive items and your negative items. And obviously, positive items are, you've got a credit card, you had a student loan, you have a mortgage, you have a car loan, you pay them all on time, you're never late. That's a positive item, it helps your score. However, negative items are, you have a 30-day late payment on one of them. Maybe you had a medical bill pop up that you didn't know about, shows up as a collection on your credit report. Maybe when you were younger, you had credit cards that you goofed, you didn't pay, they got charged off, and now you owe it. That's what they call chargeback. Or maybe when you were younger, you had a car loan and you had some problem with your income and you couldn't pay it, it got repossessed. Now it's a repo on your credit report. So there's a whole bunch of things that are essentially negative items on your credit report. And those are the negative items that's what causes you to have bad credit. That's what causes you for your score to be low. And when that happens, now you're going to have problems getting approved for anything, getting approved for another credit card, getting approved to buy another car, getting approved for a mortgage. Okay, the different types of negative items, I went over a few of them. How do they affect your score? The first one I'm going to mention is late payments. If you have whether it's credit card, car loan, mortgage, a late payment, a 30 late payment, meaning you can be a few days late, 20 days late, it's not going to affect your credit score because it's not going to clear your credit report. In fact, creditors love it when you're only a week late because then they get charged a late payment fee and they don't have to report it 30 late to your credit score. It's free money for them. But once it gets past the 30 days late, that's when the creditor, whether it's Capital One or some mortgage company or a car loan, they're going to report this 30 days late. And depending on what your score is before that, that 130 late payment could cost you 50, 70, 90 points. A late payment could easily kill your score a lot. And as far as credit repair is concerned, I can almost never believe those unless you had some sort of circumstances that we can use to get you to believe it. So that's why late payments are the worst thing you can do for a score. Another item that comes up is debt settlement. We had mentioned before that, let's say when you were younger, you had a credit card, you charged it up, you didn't pay it, you got charged off, and at some point, you settled. Usually those things will still remain on your credit report, but if you did settle and now it's a zero balance, it's going to affect it less, but it's still a negative. But in general, it's better to settle those if you can. People ask about foreclosures. How's that going to affect your credit score? Again, it's a negative, but depending on how the mortgage lender is reporting it, sometimes it's initially bad, but then as each month goes by, it's going to affect you less and less. It all really depends on how the mortgage lender reports it to your credit report. People ask about what about bankruptcies? How do those affect my score? In general, initially a bankruptcy, the bankruptcy itself is negative. However, if you do file bankruptcy, and anybody who's filed bankruptcy can tell you this, immediately after the bankruptcy is discharged, which means it goes through the whole court process, your credit score is immediately better, surprisingly. Most people's fear of bankruptcy is like, oh, I don't want to file bankruptcy. You qualify for bankruptcy by far is your best option. The only drawback to bankruptcy is you can't get a mortgage for about 2 years. Usually that's the guidelines. Other than that, bankruptcy is by far your best option. So don't be afraid. If you've had a bankruptcy in the past, trust me, it's not going to hold you back from getting in, especially if it's been more than 2 years. It's not going to stop you from getting a mortgage at all. And if it's been 2 years since your bankruptcy and you still have a low score, it's not from the bankruptcy or any of the accounts that are included in bankruptcy. It's usually something else. Collections is a type of account people ask about. How does that affect my score? In general, it goes by the age of collection. A more recent collection is going to hurt your score more than something that was older. The good thing about, yes.
Is it true collections go away after 7 years?
Say it again.
Is it true collection that goes away after 7 years?
She's asking if collections go away after 7 years. It's actually 7 years from whenever you stop paying the original account. So very often you'll see a collection appear, and maybe you stopped paying that original Capital One card, 6 years ago. So even though the collection is new from whatever collection agency, they've only got maybe a year to report that on your credit report. So those collections, they will in general fall off by themselves 7 years from whenever you stop paying the original account. However, there's a whole class of collection agencies that are just shady, and they will report things that you stopped paying 7, 8, 10 years ago. So again, if something pops up in your credit report, that's why it's important to have somebody like yourself take the steps to make sure they're allowed to report that. Other collections that have come up, again, something like that, a credit card that you didn't pay off, medical bills is very often a collection I see that somebody might have great insurance, and all of a sudden this medical collection pops up under a report, and it was a copay they didn't know about, or their insurance failed to pay the, whatever to the medical service provider. There's new debt collection rules that are in effect that I can use to very often just delete a lot of those. There's collections for cell phone bills. Again, that's a lot of categories of shady collection agencies like to try to collect on cell phone bills. And you will often find collection agencies, they'll collect on, like you mentioned, things that is it older than 7 years. That means it can't be reported to your credit report. However, technically, legally, you still owe it. So very often a collection agency will just send you a letter, we're collecting for this Capital One card. And you're like, oh yeah, that's right, I didn't pay that. Okay, I'll settle with you. Not realizing that you didn't have to pay them because it can no longer be in your credit report. In California, after 4 years, they can't sue you. But a lot of people don't know that. They just remember I had that Capital One card, okay, I'll pay you. And so there are a lot of collection agencies, that's what they try. Yeah, Jim.
So somebody has a collection, $2,000, $3,000. They don't know if they should pay it or not. But your fee is what to handle that account and only get paid if you are successful, right?
Yeah, my fee with, he was asking about if somebody has a collection, let's say it's large, in the thousands of dollars, $2,000, $3,000, and they're thinking, should I pay it or not? My fee, I charge $80 per account per bureau. That's only if I think I can delete it. So depending on what, let's say in this situation you're buying a home, depending on what score your loan officer needs for you to get to approval and what's on the rest of your credit report, I may or may not. If I think I can outright delete it, then I'll do that. If I think it's something you need to settle and pay, and then I can delete it after it's zero balance because we need to do that to get your score to the level that your loan officer needs, then I would recommend. But very often, if somebody's going to buy a house, a loan officer says, we need you at this score. And I look at your collections, I will just say, let's start at the bottom, the smallest collections, so that you're spending the least amount of money. And if we can get you to the score we need, and we don't have to touch those big collections, great, because why pay a collection agency if they don't have to when you can still get your house? Yes, follow-up question, Jim.
So one of the things that I didn't understand until working with you was that technically trying to address a charge-off is actually counterproductive. I was spending money and potentially making my credit score worse.
Yes.
Can you address why they should let my dog lie.
So the question is, if you have a charge-off, again, not to pick on them, let's say Capital One, you had an old credit card, it got charged off, okay? So on your credit report, you're gonna see that under the credit cards, Capital One, charge-off, you have a balance, let's say $2,000. Very often, you might see it also as a collection from some collection agency. They're collecting on it. But very often, there isn't any collection agency collecting on it. It's just showing Capital One charge off. Now, depending on whether or not Capital One is updating it every month, very often the creditor, credit card company, they've given up on it. They're not updating it every month. They're still showing that you owe. But if they have stopped updating it every month, very often I'll say, don't touch that thing. Because if you try to delete it or do anything with it, now Capital One's like, oh, this person wants to do something. We've got to start updating. And we've just made your score worse. So that's why it's very important to have somebody like myself look at your credit report to tell you, okay, we're going to try to attack these items. These other items, don't touch them because we can get your score up without touching them. If we try to touch them, we might make it worse. Another question, Tim, follow.
Last one, I promise. And this is one I actually wanted to learn about. So there's new credit law around medical collections.
Yes.
They're paid. And one of my biggest issues that I have to deal with as a loan officer is always medical collections. Because, you know, you can hit like 100 points for literally like a 30 or 50 or 2,000. Doesn't matter the balance. My understanding is that there's some new laws that make getting those taken care of easier.
Okay, he's asking about the new laws or guidelines regarding medical debt collections. This past year, the CFPB, which is the Consumer Financial Protection Bureau, which is the federal agency, it's a newer agency, and they regulate collection agencies. They actually regulate credit bureaus. So, you know, they realize that medical collections it's one category of collections that's really unfair. The main reason is because, like, again, you signed up for Capital One and you didn't pay a charge off. Well, you signed up for that, okay? But a medical collection, you didn't sign up to break your leg. You know, and that shouldn't reflect on your creditworthiness just because you got hurt or you had to go to the hospital or whatever, and now there's a medical. So that was one of the reasons why the CFPB created these new rules to where you should, as a consumer, be punished for medical collection. And so the rules are in general, number one, if you have a medical collection, the collection agency can't put it on your credit report for 12 months from whenever the date of medical service was. The reason for that is, as anybody health insurance realizes, it takes time for your health insurance to get the bill and determine how much they're going to pay or pay it all, or the provider is going to be like, oh, you got this insurance, we get that rate for that. And so you need that much time very often for the bill to be taken care of, so that way it doesn't show up on your credit report. The second rule is that medical collections under $500 are not supposed to be reported on your credit report at all. Because, again, and I see this very often, a medical collection for $10, and it just ruins somebody's credit score. And it's just silly. You know, I went to the doctor, the $10 copay because of this basic thing. I didn't, you know, I thought I paid it, they didn't charge me the copay, and 3 months later you have a $10 medical debt collection. So that's why they made that rule. The other rule is paid medical collections. After you pay a medical collection, now it's a zero balance, it can't be recorded on your credit report. Now keep in mind, all these three rules are using the word supposed. Because remember I just talked about shady collection agencies? Well, guess what? Between the credit bureaus, which are never the consumer's friend, and collection agencies, they're not going to follow half the rules anyhow. So even though there are new rules in effect, I still see it happening. It's good that I have those rules now to get a lot of this deleted, but don't be surprised. Many collection agencies are still going to break the rules. Question.
What's your best approach for people that have late payments on their credit cards but still want to buy a home to improve their credit score? What's your best advice for them?
I would have to see their credit report, but in general, let's say for whatever reason, somebody has the income to buy a house and they were just had 30 days late on their credit card for whatever reason. Very often, people just are unorganized, just like, I forgot, I'm 30 days late, and it really hurts their score. In that situation, since I can't fix that, they're probably going to have to really pay down their credit card balances, because your credit card balance versus your credit limit makes a huge difference in your score. Let's say you have several credit cards and you've got 3,000 in available credit. Well, if you have, when it's maxed out versus having it down to 300, that might be a 100-point difference in score right there. So since we can't do anything about your late payments, now we have to see what else we can do as far as, maybe we need to pay and delete some collections. Maybe you need to reduce your balances. That's a situation, again, if somebody like myself has to look at the whole report. I can't fix that late payment. All right, what can we fix to get you to the score that your loan officer needs right now?
Would you ever recommend filing for bankruptcy?
If you qualify, the question is, would I ever recommend filing for bankruptcy? If somebody is in a situation where they've got a lot of debt, and sometimes it doesn't have to be a lot, you could have $15,000 in debt, but if you have no job and no income, that's.
Is there a limit on that?
No, there isn't. And it's all versus your ability to repay. So if somebody qualifies, if I look at the credit report and I say, you've got all this debt, and they're like, right now it's hard to be employed, but there are times in the past where you could really have problems with your income. And 100%, I would tell them, just file bankruptcy. If it's a situation where I can't get your score, you're going to be paying me a lot of money, and you can't even afford to pay your own bill. So what's the point? Just file bankruptcy, wait 2 years, and you buy a house. Your credit's going to. If you don't make any mistakes after filing your bankruptcy, you're going to be in the 700s after 2 years, and you're going to buy a house. So yes, very often, if I look at somebody's credit report and they'll qualify for bankruptcy, or I think they will, I'll refer them to a bankruptcy attorney. Tim, again.
I know. Answer my collection thing on the way. So on the collection, if I negotiate for less than full payoff, and then they show it paid for less, can I still go back and get it removed?
If it's a collection agency, there's difference. Remember I said Capital One is going to report as a charge-off? So
I'm talking about collection.
Okay.
Not late. I'm talking about, I got a question. You're dragging my scores down by 80 to 100 points. I want to know, if I go out and negotiate with this medical bill, pay it off for less than full, they do it like a collection agency wants to really go over. They're getting cents on the dollar. They buy it less than fees, right? You're trying to get rid of it. And they accept it, right? They accept 70 cents on the dollar. Can I still have you go back? You negotiate that, first of all, I know you do that. But second of all, can you still go back and use the laws to get rid of it?
Okay, so the question is, if on a collection, if the consumer settles for less, and many collection agencies will settle for less, make the balance zero, can that collection then be deleted?
Specifically medical.
Specifically medical.
And then the other you can address.
Okay.
Specifically medical.
Specifically medical, yes.
Okay.
So it doesn't matter how much you settle for it. If it's a zero balance and it's medical, it's going to be deleted. Not a problem. As far as other collections, again, you had a Capital One, it was being collected from a collection agency.
Get on American Express, damn it!
I don't know what hashtag Capital One is going to you had a Capital One card, you didn't pay it off, they sent it to a collection agency, you negotiated for half or maybe less. The collection agency made it a zero balance. Now it's a zero balance collection and a credit report. In general, I can delete that. Okay? Usually. keep in mind, legally, that collection agency can keep reporting that, again, up to 7 years from whenever you stop paying the original capital loss. But most of the time they won't, because it costs them to report that every month. It's only pennies, but it adds up. And they've already gotten paid. So they're going to be much less diligent about keeping on their credit report, because what do they care? They already got their money.
Last question. I'm gonna let everybody else ask a
Another
question.
question from Jim.
Because I'm in the mortgage business, and this is what I deal with. Should I start this 10 days before I want to write an offer? Can I fix my credit faster than I made it go bad?
Of
Now,
course you can. You'll
when
be
Lauren comes
Hey, I
up,
just had an offer accepted. Can you make my credit perfect now?
she's going to talk about this offer. Tim's question is, if you've already got an offer in a property, or basically you're in the purchase process, is that the time to start credit repair? No, the time to start credit repair was at least 90 days before that, and preferably before. Even though I know for somebody that's a buyer, they've got the income, they're excited, they want to buy a house. Oh, my wife just saw this one, we want to put in an offer, and I'm sure Lori's office is going to do this, but very often you find realtors like, let's put in the offer, let's just do it. Then the loan officer runs the credit report. Then the loan officer runs the credit report. If you're at 480, and Carl, can you get this person's score up in 45 days? No.
21 days.
21 days.
Well, it could be 10.
So,
I know you're super young.
yes. And, your credit repair, you definitely want to get your score up where it should be, so that when the loan officer says, which one is better, the pre-qualification or pre-approval? Pre-approval. Okay. You want to make sure your loan officer says you're pre-approved. You have that's what you want to do first. And if you need to get your credit fixed, you want to do that before you even put in an offer, because you don't want surprises when you're all having bought this house, you realize you can't get the loan and somebody else is going to buy it.
Hey, Carl,
Yes.
we have a question from the internet on our YouTube station. Love it. So we have a question that says, does it still negatively affect your credit to have your score checked multiple times, like when buying a car or making a large credit purchase?
Okay, so the question is, if you have what's called a hard inquiry, like if you're going to buy a car or a big purchase or something like that, even a big purchase, it could be a Capital One credit card. A hard inquiry is a hard inquiry, doesn't matter what you were trying to buy. Hard inquiries do reduce your score temporarily, like 30 days, 45 days, and each one is going to hurt you 2 to 3 points maybe. Very often we've seen car dealerships, that's why it's brought up, because you go to a car dealership, they want to sell you a car. They do not want you to leave without getting that car. And so you sign the application, or we're going to credit. Well, nobody reads the fine print that says, by the way, we're going to run it like 10 times, because we really want to find you a lender and get you approved. And so you go to buy a car, you'll see on your credit report afterwards, man, there's like 6 hard inquiries.
I got 20 rejection letters in the mail.
So, but that's temporary. You're going to get all those points back in probably 30, 45 days. So that's another reason why realtors and lenders, if you're going to buy a house, will tell you, don't go car shopping until after you get the mortgage closed. Because otherwise, if you do things like that, maybe you needed 680 and you just went shopping and all of a sudden which is 675. So, good question. Don't incur hard inquiries when you're in the mortgage process.
Yeah, I love that.
Okay. So another question was, can bad credit be deleted or corrected? The answer is yes, it can. That doesn't mean it will. Anything on a credit report can be deleted. There's no law that says anything must be reported to your credit report. However, depending on situations, you're going to find, certain creditors or collection agencies, they're not going to budge. very often there's a lot of collection agencies. I got no tricks, I got no techniques, and I cannot outright delete them. I've been doing this for 18 years. I keep a database of every single collection agency creditor I've ever dealt with. I know which ones I can delete. I know which ones that they are not budging. So again, that's a situation where I need to see the report, and I can say, oh, I'm pretty sure I can delete those guys we can delete after committee. That guy I'm not touching because I don't like them, they won't delete. So question.
Is it better to focus on old credit or build credit?
Okay, the question is it better to focus on old negative credit or build new good credit? It's a very good question, and it's kind of a combination because again, if you have old negative credit, it all depends on that creditor collection agency is updating it every month. If they've kind of given up on it, but it's still on there with a balance, but they're not updating it every month, I might just say don't touch it. Let it get old, don't pay it, who cares? Building positive new credit is always going to be good. If somebody, for example, doesn't have a credit card, credit cards are revolving accounts. That's like 30-40% of your score. And if somebody doesn't have one, they are missing out on some of those points. But if you have negative credit, you're not going to get approved for a credit card. What are you going to do? Well, that's what secured credit cards are designed for. Where you can go to a bank, there's like a handful of banks, B of A, Wells Fargo, Citibank, US Bank, American Bank, they all have secured credit cards. You can go to Capital One online or First Premier, and a secured credit card is where you have to deposit $200-$300. They will issue a Visa MasterCard with the same credit limit. Now it'll appear in the credit report. If you use it, just pay the bill on time. After a couple of years, you'll get the deposit back and that's a negative credit card. So that's how you can build new credit. Another way to build new credit is to become an authorized user. If you have a family member or friend, they have a credit card, they've never ever been late on. It's the balance to the credit limit is, let's say, less than 50%. They can make you an authorized user. It's easy to do. They can do it online through their credit card issuer. Now that credit card appears on your credit report. They don't have to give you that credit card through you. They can make it to where you get no access. And now their good credit helps you. I've actually done that exact thing with my Visa and Mastercard. Turning 18, I'm like, here, I'm going to put my credit cards on your credit report. You're an authorized user. I am not giving you the cards. You don't get anything. But now I've just boosted their credit score. They're in the 700s and they're 19 years old. So those are the two ways that you can work on new positive credit. Yes. And you may not want to touch negative credit. Yes.
Talk to us about like these credit companies like Experian, TransUnion that offer the credit boost. What exactly is that? How does it like affect your credit, and can it actually help you qualify?
Okay, so the question is about these credit bureaus that offer what's called credit boost, and what that is. Some of these bureaus realize that okay, if people are paying rent or they're paying their utilities on time, or those are payments. Why don't people get credit for doing that? They're paying those a month every time. So Experian does it. I'm not sure if TransUnion does it. They call it different things. I think Experian calls it credit boost. And so what they do is a process where they verify with your utility company or whoever you tell them that you're making these payments with. Some property management companies might do it with them. So now Experian starts reporting that to your credit report. And very often for, let's say Experian, yeah, it would definitely boost your score. And it's a good way in general just to get your score. However, that's a situation where you've got to be careful and check with your loan officer because mortgage lenders realize that, hey, you know what? Maybe we don't want to base somebody's score on if they pay their electrical bill on time. Let's go based on the normal, credit cards and stuff like that. So there are some mortgage lenders that they see a credit report from a consumer. Oh, you got an Experian boost. Now either you take that off or we're not counting that score. So you've got to be careful. Check with your mortgage lender, depending on what you're trying to get. That might work against you. Now, in general, if you're not trying to buy a house, yeah, it's going to get your score up, and you know, you can get a car, get a credit card. So there are pluses and minuses to doing that type of, you know, boosting with your utilities. Where are you at on time?
We're at 7:05.
Okay. Yes, Chris.
How can I proactively protect my credit from divorce?
Oh, okay. Good question. The question is, how can you proactively protect your credit from divorce? And I see this a lot from people that get divorced. They go through the divorce process in the court, and even if it's amicable, you take the car, I'll take this car, you know, you keep the house, and then I'll move out, and then you refinance the house and take me off the mortgage, and it could be totally amicable. But keep in mind, a divorce judge cannot take you off any financial contract. Only a bankruptcy judge can. So the risk in those situations is, oh, here, you keep that car, honey, and, well, it doesn't call them honey anymore. You keep that car, I'll take this car. Well, that spouse, if they're late on that car loan, now this person has a late payment on the car loan, and it just wrecked their score. Or let's say with a house. That spouse kept the house with the mortgage with 2 names on it. The other spouse, like, I'll buy my own house or rent, whatever, and that spouse missed the payment on the mortgage. And now that late payment appears on this spouse's credit report and just wrecked that spouse's score. Again, creditors, whether it's, you know, mortgage, credit card company, car loans, they don't care whether you're married or not. You're just 2 adults that are signing a joint financial contract. So guess what? They don't care if you're divorced or not. You're still the same 2 adults on the same financial contract. Both of you are equally responsible for it. It doesn't matter what the divorce judge said. So if you're in the process of divorce, make sure that you're off everything. Or if you're worried one spouse is more, you know, you pay the bill and let him pay you.
Did you run credit before you got remarried?
First of all,
You better check to see if she's watching.
it wasn't remarried.
Married, sorry.
And yet, yes. No. I ran my own credit, so that Nicole, she wanted to look at my credit.
That's my kind of girl.
Okay, so I have, I think an hour or two. So right now I'm gonna have Tim for a little bit, or who wants?
Tim, I think it's weird.
Okay, we're gonna take
I'm
out the
called
break.
to close.
Yes. And I want to thank everybody for staying online, listening. If you have any further questions, I think Kara's going to maybe put my email address down there. You can email me with any questions, and I generally get back within 24 hours. If you are a buyer, if you are thinking about buying, again, keep in mind, if you have the income, I don't care what your credit score is or how bad you think it is. I can almost always find a path for you to get approved for mortgage. So that being said, we're going to turn it over to Lori. She's going to tell you what you need to do to get started. So thank you very much for listening.
You were amazing. I'm so excited, totally stoked, because guess what? Not only did I get him with the help of Cornerstone Mortgage, give them a big round of applause. And all of our amazing real estate agents. We have Melissa here, we have Kelly here, we have Hasina here, and we have Amy here. And oh my gosh, all we care about is helping you get on the path to homeownership. That's all we care about. And it may not be today, it may not be tomorrow, but it will happen when you start taking the appropriate steps of moving forward. So if you've got bad credit and you've got challenges and whatever, you're personally embarrassed by it, I get it. I filed a BK when I was 22. Come on, I get it. Life isn't easy. It knocks you on your butt and you get back up and you make it happen. And the only way that happens is by partnering with people who care to move you forward. And that's what we do over at Cornerstone. That's what we do over at Real Estate Resolve. We care to help move you forward. So how do you do that? Reach out to your local agent. Not me, no one else. I don't know what you're thinking. Okay, reach out to your local real estate agent. If they care, they're going to connect you with all the right people to get you moving forward. Because it's really not as hard as you think it is. Tim, am I wrong? What do you got?
You're never wrong, Lori.
I know.
You're never wrong.
That's why you're my
I'm
partner.
pretty sure I don't need a microphone.
Oh, I know you do.
So here's the deal that I need to tell you guys. So one of the things a lot of people don't know is that the credit, I have to come over here. I was trying to keep my skin side. If I kept half of it, I figured I was like a normal
You're
guy.
probably not on your camera.
All right, here's the deal. So one of the things people don't understand is when we run credit, we run 3 different agencies. Equifax, Experian,
Really?
and TransUnion. We take the middle score, and one of the things is that we can get that middle score up a lot of times. But more importantly, through our credit agencies, we have what if estimators, which means we can tell you exactly what to pay off to get the highest FICO score. So it could just be that, yeah, your credit score is actually good, but maybe you have a little bit too much on a credit card just because you took a flight or you went to Hawaii or you did something, and it's going to hurt you and cost you a lot more money than it should have. We can tell you when we run that credit report and we go through and run the estimator what to do to get the optimal score. Because believe it or not, just having the optimal score can cost you a point or two on a loan. And on a $500,000 loan, we're talking about $5,000 or $10,000. And a what if scenario is running us doing a rapid rescore may only cost a couple $100. So remember, we have the ability to run that credit and then say what needs to be worked on. And then we call Carl and say, Carl, help us achieve this, because he is the absolute expert on how to deal with collection agencies. I can't talk to collection agencies. I'm cussing them out in 2 seconds. I do not have a business. When he says they're crooked, he's being nice. And by the way, I have Capital One in my personal deals. Capital One is very, very good.
But you want to get.
But I pay them on time.
Hey, we had so fun. Thank you for tuning in. I'm looking forward to Carl. Thank you, Carl. Everyone give him a amazing, great information. I learned something new, and I've been in the real estate business for 17 years, and I've had bad credit. So let me tell you, I'm okay right now. Let me tell you, we are so excited. And we are here for the long term of it all. We're here to walk the path with you. We're here to support you in your home ownership goals, whatever they be, wherever they take you. We are here to support you. Thank you so much. And Carl, I can't wait to have you on the podcast. Thank you.